Terror and violence have taken over the eastern European nation of Ukraine since the Russian troops started to invade the land. The effect of this violent invasion has been seen on various other events and institutions of the world, and be it the political upheaval that took place globally after the conflict began, or the way the financial institutions got altered, a big wave of change has been unrolling since this conflict began. This article was written by the team of Kalkine writers. I'm happy to present it to you today, but please subscribe to the channel. I'm Sage for Kalkine Media. The impact of this war has also been prominently evident on the markets around the world, with European share markets sinking for obvious reasons and the Asian markets performing well. In today's episode, we'll look at how the Russia-Ukraine conflict has unfolded for the Australian market. So without further ado, let's get into it. And the global share markets have seen a downward trend in the recent days following the developments happening around the war and its consequences, like the Western allies shooting sanctions, including cutting off some of Russia's banks from the SWIFT financial network and limiting Moscow's ability to deploy its $630 billion of foreign reserves, to name just a few. Australia's S&P/ASX 200 index gained recently despite the crisis, and miners led the gains in the country, rising 3.2% on strong iron ore prices as the tensions about the prolonged armed conflict between Russia and Ukraine arose, and about how it could curb global supply of the key steel-making ingredient. Even the energy stocks witnessed an upward trend and the oil prices surged too, like the Woodside Petroleum, advancing by 2.1%. Australia's central bank has opted to keep interest rates at a record low for the moment. The Reserve Bank of Australia highlighted that the crisis in Ukraine is serving as a source of uncertainty that called for highly supportive monetary conditions. The Asian financial markets have been performing pretty well due to the disturbances in the European region. Japan's benchmark Nikkei 225 gained and has been gaining. The Shanghai Composite added 0.3% to reach 3,471.55. So in conclusion, the situation in Eastern Europe is not seeming to end anytime soon. The surging oil prices and increasing financial pressure from the United States and its allies on Russia, one of the world's largest energy exporters, for its invasion of Ukraine, are adding to uncertainty about the global economic outlook. So it is yet to be seen how the situation would unfold further down the line. Thanks for joining us on this report, and if you do like the information, let us know by liking, sharing, commenting on the video below. Subscribe to the channel. If you do press that bell icon, you'll be notified every time Kalkine has a new video. But for more articles like this, please head to the website. It's kalkinemedia.com. And my name's Sage for Kalkine Media.